Picture this. It is 2019. You are sitting in an economy class seat, 35,000 feet above the Atlantic Ocean. The flight attendant is serving drinks. The pilot announces you are cruising at 600 miles per hour. You look around at the hundreds of passengers, the massive engineering marvel that is the aircraft, and the global network of airports and logistics that made this journey possible. And you think to yourself, this is a massive industry. This is the backbone of global commerce. This must be a gold mine for investors. You would be wrong. Dead wrong. In fact, if you had invested $10,000 in the airline industry back in 1970 and reinvested every single dividend along the way, do you know what that investment would be worth today? It would be worth roughly $30,000. That is it. A paltry 3x return over 50 years. Meanwhile, the same $10,000 invested in the S&P 500 would have grown to over $1.5 million. Read that again. $30,000 versus $1.5 million. Today, we are going to answer the question that every investor has asked themselves at some point. Why do airlines almost never make good long-term stocks? We are talking real numbers, real historical performance, real industry economics, and the one single metric that has destroyed airline shareholders for generations. Stay until the end because the profitability statistic we reveal at the 8-minute mark, it will make you never look at an airline stock the same way again. Welcome back to our channel, the channel where we cut through the noise and give you the real story on the investments everyone is too afraid to talk about. If you are new here, smash that subscribe button right now because you do not want to miss what is coming. Today we are going head-to-head with one of the most deceptive industries in the stock market. Airlines versus practically everything else. Two sides. One is the lifeblood of the global economy. The other is the graveyard of investor capital. We are talking returns, profit margins, competitive dynamics, capital intensity, regulation, and the one category where airlines have consistently underperformed for half a century. Let us get into it. The numbers that will shock you. Let us start where every serious investment analysis should start. The returns, the actual cold hard numbers. From 1970 to 2020, the airline industry delivered an average annual return of approximately 2.5%. That is less than inflation. That is less than a savings account in some decades. That is abysmal. But wait, you might be thinking, what about Warren Buffett? Did he not famously invest in airlines? Yes, he did, and he famously lost money on them, multiple times. Buffett himself has called the airline industry a death trap for investors. And the data proves him right. Over the past 50 years, airlines have generated less than half the returns of utility stocks, and utilities are famously boring. Even during the boom times, airline stocks have underperformed. The 1990s was a decade of massive growth in air travel. Passenger miles doubled. And yet, the airline sector underperformed the broader market by a staggering margin. Let that sink in. An industry that grew at double-digit rates for a decade managed to deliver below-average returns to its shareholders. How is that even possible? The economics that destroy shareholder value. Here is where the real story begins. The economics. The brutal, unforgiving economics that make the airline industry a nightmare for long-term investors. Airlines are what economists call a capital-intensive, low-margin business. That is a fancy way of saying they spend billions on things that lose value and make pennies on every dollar of revenue. Consider this. An airline buys a Boeing 737 for roughly $100 million. That aircraft has a useful life of about 20 to 25 years. After that, it is worth scrap value. So you have a multi-billion-dollar asset that is depreciating every single day. But here is the kicker. That aircraft does not make money while it is parked. It only makes money when it is flying. And when it is flying, it costs money. Fuel, crew, maintenance, airport fees, landing rights, catering, the list goes on. And what do you get in return? A profit margin of 2% to 3% on a good year. That is it. For every $100 of revenue, the airline keeps $2 or $3 as profit. Compare that to technology companies with margins of 20% to 30%. Compare that to consumer staples with margins of 10% to 15%. Airlines are doing the heavy lifting of the global economy, and they are getting paid like a minimum wage worker. The labor and fuel problem. Here is where it gets even worse. Because airlines do not just have to deal with economic cycles, they have to deal with two uncontrollable costs: labor and fuel. Let us start with labor. Airlines are heavily unionized. Pilots, flight attendants, mechanics, baggage handlers, they all have unions, and those unions are powerful. When the economy is good, the unions demand higher wages, and they get them. When the economy is bad, the airlines try to cut wages, and the unions fight back. Sometimes they strike. Sometimes they shut the airline down. What does this mean for shareholders? It means costs are sticky. They go up easily and come down slowly. Even in a downturn, airlines cannot simply slash their labor costs. They are locked into contracts. Now, let us talk about fuel. Fuel is the single biggest variable cost for an airline. It can represent 20% to 30% of total operating costs. And here is the thing about fuel. The airline does not control it. When oil prices spike, the airlines get crushed. They cannot pass the cost on to customers quickly. They have to absorb it. And those fuel hedges everyone talks about, they do not always work. Sometimes they lose money on the hedges too. So you have an industry with uncontrollable labor costs and uncontrollable fuel costs, and you wonder why the stocks perform poorly. The Warren Buffett trap. This is where the story gets really interesting, because even the greatest investor in history got trapped by the airline industry. Warren Buffett has said repeatedly that he avoids airlines. If a capitalist had been present at Kitty Hawk back in 1903, he famously said he should have shot Orville down. He understood that the industry destroyed capital. And yet, in 2016, Berkshire Hathaway bought major stakes in American, Delta, United, and Southwest. Buffett called it a vote of confidence in the industry. Then 2020 happened. The pandemic hit. Airlines lost billions. Berkshire sold its stakes at a loss. Buffett admitted he made a mistake. If the greatest investor of all time could not consistently profit from airlines, what chance does a retail investor have? That is the question you need to ask yourself before you buy airline stock. The operational stat that changes everything. Okay, I promised you a stat at the 8-minute mark that would shock you. Here it is. Do you know what the cumulative net profit of the entire airline industry has been since its inception? Since the first commercial flight in 1914? Zero. The airline industry, from the beginning of time, has generated precisely zero cumulative net profit. Listen to that again. All the revenue, all the passenger miles, all the aircraft, all the technological innovation, and the total cumulative net profit is exactly zero. That is not an exaggeration, that is a fact. In some years the industry makes a profit, in other years it makes a loss. But when you add it all up over a century, the profits and losses cancel each other out. That is the operational reality of the airline industry. It is a zero-profit industry over the long run. The final verdict. On short-term volatility, airlines are not even close to boring. On long-term wealth creation, almost anything else is better. Utilities, consumer staples, real estate, even bonds, they have all outperformed airlines. Airlines are extraordinary businesses. They connect the world. They enable global commerce. They make modern life possible. But they are terrible investments. And that is the truth that the financial content world does not want to say out loud. Because it is easier to talk about the romance of air travel and the growth of passenger miles than to tell people, do not buy this stock. If this video gave you something to think about, do me a favor and hit that like button right now. It takes 1 second and it helps this channel more than you know. Subscribe if you have not already. We drop market deep dives, investing strategies and financial history every single week. And comment below, have you ever owned an airline stock? Did it make you money or lose you money? I read every single one. End.